Good morning, hello and welcome to Opening Bell. You're with us on Moneycontrol. We're coming to you live on our YouTube channel. I'm Surbhi Upadhyay. It's Wednesday, we're in the middle of the week and we're seeing a very curious divergence play out. A divergence between what is happening on ground in the war, where there seems to be no let-up in hostilities and more key leaders on the Iranian side have been taken out by Israel and the US. And a disconnect between how markets have been reacting to it, because you would imagine that oil prices continue to spike higher with these kind of reports, attacks on the oil infrastructure in UAE as well. But no, that's not what's happening. Oil prices have actually been very range bound. They've actually come off a little bit. So what is it that the oil market is sensing? Well, that's what we will talk about as we go ahead on the show. But before we get started, let's hear it from the man himself, US President Donald Trump. He said yesterday that the US was not ready to leave its military operations in Iran just yet. Hear out the US president.
Iran is just a military operation to me. Iran is something that was essentially largely over in 2 or 3 days because the Navy was wiped out almost immediately. The Air Force came next. The anti-aircraft came next. I mean, we're flying over Iran. We could take out their electric capacity in 1 hour. We have all there's nothing they can do right now because everything is knocked out. They have no radar, no anti-aircraft. They have nothing, but we're not ready to leave yet. But we'll be leaving in the near future. We'll be leaving in pretty much the very near future. But right now they've been decimated from every standpoint. And again, we've had great support from countries in the Middle East, great support, but we've had essentially no support from NATO.
Okay, not ready to leave just yet, but we could be leaving in the near future. That's the US president. Let's get you the headlines. Iran confirms the death of its national security official Ali Larijani and a Basij force commander after Israel said it carried out both assassinations. Iran launches more strikes towards central Israel with at least 2 people reported dead. Saudi Arabia, Qatar, Bahrain as well as the UAE report intercepting drones and missiles in the past few hours. The US has reportedly hit Iranian missile sites near the Strait of Hormuz. US President Donald Trump slams the allies, calls NATO's refusal to help on Iran a very foolish mistake, and says the US doesn't need anyone. Separately, US head of counter-terrorism Joe Kent resigns, becoming the most senior member of the Trump administration to quit over the war in Iran, saying Tehran posed no immediate threat to the US. Stocks on Wall Street closed Tuesday's trading session moderately higher as traders shifted focus to the US Federal Reserve's interest rate decision. Due later tonight, the central bank is expected to keep rates unchanged. Markets in the Asia-Pacific region start higher, tracking cues from Wall Street. Meanwhile, the GIFT Nifty is also indicating a positive start for domestic markets. Brent crude oil prices hover around $102 per barrel, underpinned by ongoing hostilities in West Asia and uncertainties around the Strait of Hormuz. Meanwhile, gold prices stay above $5,000 an ounce as traders assess the impact of fluctuating oil prices on inflation ahead of the Fed's monetary policy decision. Okay, so let's quickly take you through the cues in a little more detail. What did we have on Wall Street? Even as those drones and those missiles continue to fly over West Asian skies, markets have largely, I wouldn't want to say shrugged it off, but they have chosen to kind of start, looking at other things as well. Yesterday, we had another positive close on Wall Street. Not too much. The Dow was actually up just about 0.1%, but the other indices managed to put up anything between 0.25% to about 0.5% on the Nasdaq. Now, crude oil prices are still elevated, but they're not raging away. We're looking at a price of about 102 to 103 per barrel this morning on Brent. And this as Iran continued to attack UAE's energy infrastructure. Yesterday, again, we had, explosions around Fujairah. A tanker near the Strait of Hormuz was hit. And after Ali Larijani's assassination, there is a fresh wave of strikes from the Iranian side that is being reported even as we speak. Now, despite all of that, crude oil prices have been very, very range bound. The Fed meeting, of course, is in focus today. We're not expecting any sort of a change in terms of the stance just yet from the Fed, but it's an important meeting to watch out for the commentary and the inflation impact of this war. Now, in the midst of all of this, what is President Trump saying? He's saying, I actually don't need anyone in this war, but he's obviously very upset that his NATO allies are not coming to help him open up the Strait of Hormuz. Hear out the US president.
Are you rethinking the United States' relationship with NATO possibly getting out?
Well, I'm disappointed in NATO that we spend trillions of dollars on NATO. Think of it, trillions over the years, many trillions of dollars. It's one of the reasons we have deficits and we help other countries. And when they don't help us, I mean, it's certainly something that we should think about. I don't need Congress for that decision. As you probably know, I can make that decision myself. I'd work with some very smart people. And I'd always deal with Congress anyway, but I don't need Congress for that decision. But, you know, when you say rethink, I have nothing currently in mind, but I will say that I'm not exactly thrilled when we help them with Ukraine. Look, Ukraine would have been over in one day if we didn't help. Frankly, Ukraine would have been over in the first day. They had the best equipment in the world. It was our equipment, given by sleepy Joe Biden. No charge, no charge. Hundreds of billions of dollars of the best equipment in the world, no charge. I will say that I'm not happy about it.
Okay, so that's what he's saying. The question is, what will he do? Will the US look at a path of de-escalation, or will it look at reducing its role in this conflict? Is that what markets are sensing? Now, here's something more. The director of US National Intelligence, National Counter-Terrorism Center, Joseph Kent, resigned, and that also sends a big signal about how domestic leadership is thinking about this conflict and this war. And he said that I can't support this war against Iran when Iran posed no imminent threat to the US. Now, amidst all of this drama, yields have cooled off. Like I said, oil has cooled off and the dollar has cooled off as well in the last 12 hours. The dollar index this morning is below $100, below 100 mark, the dollar index. Oil, of course, is still very much above $100 a barrel, around 102 and 103. Japanese markets are actually doing very well because they've got stronger than expected trade numbers to keep traders excited. The export numbers are looking very, very good for the month of February, but other regional markets are flashing a little bit of red. Now, the GIFT Nifty was indicating that the bulls will try and build on the gains. So let's see if we can get a third straight green session. Yesterday, the Nifty managed to take out 23,500 thereabouts. Now we talk about the next resistance zone, which comes in around 23,650 to perhaps 700. FPI selling reduced yesterday. That was another good point. Yesterday's sell number was just around 4,700 odd crores. Domestic institutions were, of course, buying and offsetting that fall. So that's how we are poised. The question is, can the market look at another update? Because the market is increasingly sort of looking past the missiles and the drones and everything that's happening in West Asia. Jatin Geria is with us on the technicals this morning, and we have Gaurang Shah joining in on the fundamentals. Gentlemen, thank you very much for joining in, and a happy Wednesday to both of you. Gaurang, I want to start with exactly that question. You know, they say markets are sometimes the smartest and sometimes they're not. But in this case, what have you made of the fact that in the last 24 hours, the attacks have not stopped, Trump's rhetoric has not stopped, but crude oil prices are not spiking, and equity markets are trying to come back from oversold levels? What have you made of it?
Thank you, Surabhi, for having me on the show. Good morning to all your viewers, to you and to your entire team. A small disclosure, all recommendations that I'll be sharing with you this morning on your show, Surabhi, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Geojit, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we share advice with our clients on similar lines. They might have their investment interests. So first of all, I don't think Donald Trump is going to go silent. And it will be very difficult if he does that, Surabhi. He's known for his rhetorics and controversial statements and always shifting the goalpost. So there's nothing new about him, and he'll continue to do that. The war aggression level has moved up. Yes, after yesterday's, one of the frontline high-profile individual getting eliminated by Israel does escalate the war on the higher side, and hence you will see Iran being more aggressive towards Israel. And of course, if US has to use those Gulf bases and attack Iran, then again you will see some drones, you will see some missiles getting fired here and there. Mutations also will be flying here and there. This is the third week, Surabhi, and my sense is that large part of the negativity which the market had to react is already in the place. Now it will all depend upon the next level of escalation and the damages. And more importantly, what happens to that important transit point, Strait of Hormuz, because up till now, there have been some ships with certain national flags of a particular country which are allowed to sail through. India is fortunate to be one of them. And negotiations are going on by the Indian government with the Iran regime to secure further energy resources. And even if there is difficulty, Indian governments, we have mentioned, they have mentioned over the last 3-4 days that they are speaking to other countries to secure our energy requirement. Markets, I think we saw close to about 12% correction, Surabhi. 23,000, just tag below 23,000, and then we recovered. And the highest level was 26,380 or something like that. So close to about 12% correction. Bounce back was required. That's what we saw on Monday. That's what we saw yesterday. Today also, indications are that we will open up with a higher level. But I think today it will be a day of testing whether we are able to stay at that higher level or we are going to succumb. My feeling, Surabhi, is that we will come under selling pressure at higher level, because from 23,000 to the level where we are at 23,600 plus, I think we will see a little bit of profit booking. So if you short to medium term investor, use your common sense wisdom and try to maximize your profit. I am not capable to comment much on short term trading, but long term, I think this market will always reward those investors who gather courage, step out of their fear and start getting invested.
Okay, get out of your fear and start getting into investments. That's the advice from Gaurang. By the way, let me just say good morning to a lot of our viewers who are joining us on the live chat on YouTube as well. So Narendra, good morning to you. There's Prakash. We have Geetu asking exactly that question. What could be a great investment for the next 5 years? He's got two stocks in mind, Apollo Hospitals or Craftsman Auto. We'll come back to that, Geetu, in just a bit. Let me go to our other guests as well. Jatin, morning to you. So last 2 days, the market has finally obliged the bulls. For trades today, should you think of buying every time you get a dip in the market? Or do you think that the bulls have had their run and shorting at higher levels is a better strategy?
Yeah, good morning. So, what we have observed in this recent correction is that the pullbacks that have happened, or the counter trend pullbacks that have lasted mostly for a couple of days. Now, today would be a crucial day, because last couple of days we had this pullback from the sub 23,000 level. So this today will be the third day, and I think it will be a very crucial day for the Nifty. If the Nifty manages to hold on to its opening gains, then I see a possibility that the Nifty could rise towards 23,770, 23,800 kind of a levels for the next couple of days. So the pullback can continue. I am expecting the pullback to continue today as well as for tomorrow's trading session. However, from 23,800 odd levels, we can expect the selling pressure to resume. So yes, intraday, any dips should be bought into, and in fact, the GIFT Nifty is indicating a positive start. So I think the Nifty is likely to continue the pullback rally that we have seen since the last couple of trading sessions. So I would be a buyer.
Okay, all right, got that. Gentlemen, let's do one thing. Let's run through some of the stocks in news. There's lots to discuss. We have to talk about, of course, the way a lot of the stocks made a comeback. Eternal, for instance, up 6% yesterday. So it's a market-wide pullback. And we'll go through some of the more active names and active sectors bit by bit. But first, let's just quickly go over some of the stocks that are in focus today. Some of the companies, by the way, are still reporting a hit in operations because of lack of gas availability or some other issues, input issues. So let me quickly go through today's list. Let's start first with Tech Mahindra. Tech Mahindra has said that its London arm will be acquiring a 20% stake in Tech Mahindra Arabia. And this transaction is going to be worth about 206 crore rupees. Yesterday, remember, all the tech stocks had opened very weak. Then there was some recovery. So we'll talk about this as we go forward. There's some not so great news for Aurobindo Pharma. The US FDA has classified one of its facilities, that's Eugia Pharma, Unit 2 of that particular entity, as an official action indicated. It has issued a Form 489 with 9 observations to this facility. So this is basically regulatory action. The FDA is not very happy with the way the facility is being run. An official action indicated is a pretty severe sort of warning level. So let's see how the market kind of interprets this. But this is basically regulatory troubles for Aurobindo in that unit. Segal India is in focus. A joint venture that it's a part of has emerged as a L1 bidder for 2 projects. Total value is about 207 crores. This is coming in from the Punjab Infrastructure Development Board. There is Varun Beverages. They've done an acquisition. They've acquired 100% stake in Crickley Dairy, and they have spent about 131 crores on this. So that's a stock in focus from the consumer space. Shree Cements. Good news coming in for Shree. It has been declared as a preferred bidder for a limestone block in Andhra Pradesh. So keep that on your radar. Yesterday, we had some interesting trading action in Urban Company. And at the end of trade, we understood the buyers and the sellers. SBI Mutual Fund has been a key buyer in these transactions. It's bought 4% equity in Urban Company for a total of 632 crores. And the average pricing at which these deals were done is 109 rupees 80 paise. So keep this on your radar as well, Urban Company. Kirloskar Ferris has said that its Solapur plant operations have been hit because of LPG supply disruptions, and this has halted one of their molding lines. It's temporarily shut. And likewise for Tamil Nadu Petro Products as well, the company has temporarily shut down its HCD plant operations, citing Middle East geopolitical tension impact and the force majeure that has been declared. So these are some companies that are still struggling with the implications of the war. So these are some of the stocks in news. I want to start off with IT, Gaurang. Yesterday, a lot of back and forth on IT stocks. We started negative. The news was very positive. By the way, Micron is coming out with numbers today. Yesterday, global markets were positive on IT after the NVIDIA event. And Mr. Jensen saying that he's going to be earning $1 trillion in revenue. And then our IT started really lower. We'll have numbers from Micron today. What is your sense? I mean, IT stocks, would you look at buying anything now, given how badly they've sold off? And maybe a specific take on Tech Mahindra if possible, since it's in news today.
So, disclosure, Surabhi, that we have positive coverage on Tech Mahindra. And that's on the fundamental side from a long-term point of view. And eventually, if you have a little bit of understanding and you do your homework and then decide to invest into Indian IT companies, then please have 1.5, 2 year plus kind of time horizon. The reason why I say this is because there are a lot of innovations which are coming through in IT. One that came through created a havoc in the entire universe of IT, whether it is India, US, China, or anywhere else in the world. And that was Anthropic. Our sense is that the run rate of these innovations are going to go up again, which may bring in a little bit of choppiness, volatility. But I was very much excited, Surabhi, post the AI summit in Delhi and the statement, and there were who's who of the world as far as IT is concerned in the AI summit in Delhi. And we also had our own IT companies, top management participating, and a lot of them gave a verbatim that yes, these are some challenging times and they are making themselves capable to face these changes and to benefit. One of the statement by the India representative of Anthropic AI also mentioned that they are not here to kill IT companies or IT jobs, but they are here to compete and coexist and complement rather, Surabhi. These were the statements of the India rep of Anthropic. And the statements made by the third quarter, post the third quarter numbers and post the AI summit in New Delhi, We believe that there are some, decent names that you should look at. Valuation wise, your point, yes, they have become very, very attractive. But I would also say at the same breath that don't put all your money at one time. Staggered investment is always the most disciplined way to invest in stock market, whether it is to do with IT or any other sector. So we like names. I'll give you certain names in the mid. We have coverage on the positive side across all small cap, mid cap, large cap. So you have KPIT Tech, you have Cyient Limited, you have Coforge, LTI Mindtree, L&T Technologies. Amongst the large cap boys, Tech Mahindra I have already mentioned, TCS, Infosys, HCL Tech are the other names that we are positive on.
Okay, so that's traditional IT, Gaurang. Very quickly, the other kind of tech companies that we have in our market, listed market, are the platform companies, right? And what a day for some of them yesterday. I mean, Eternal surging 6%. I don't know if there was something new that the market is sensing, or maybe there's buyers coming in at lower levels. Of course, on Urban Company, we saw later that a large entity like SBI MF bought a big chunk. Maybe that got people really excited. What are your thoughts on this universe, specifically Urban Company, the move on Eternal yesterday, and would you buy anything now?
Yes, Surabhi, so there are a couple of names again in the new tech universe, as we call it. We've been positive on Eternal. In fact, yesterday I was on your sister concern channel, CNBC Awaaz, and I did mention that Eternal looks very attractive at those levels of somewhere close to about 220, 225. Our targets long term are 350 approximately, again a disclosure. Other than this, new age tech companies, we are positive on Paytm, PB, FinTech, and FNS e-commerce, that is Nikia. And all these names have done well in terms of earning visibility also, Surabhi. And I think this correction, if you really want to look at an upcoming sector which looks very promising and challenging, are these names in the new age tech stock.
Okay, so that's some advice on new age tech, old age tech and new age tech. Speaking of tech, by the way, there is a call from CLSA that has come through. And Gaurang, obviously, he named a whole bunch of mid-cap and large-cap IT stocks that he likes. CLSA is in the same camp. They have a high conviction buy on Persistent and on Coforge. They have an outperform rating on Infosys, Tech Mahindra, TCS, LTI Mindtree. And they're saying, this is CLSA, CLSA is saying that there is no AI-led pricing pressure that is currently being seen when deals are getting renewed, which is obviously very, very positive. It's acknowledging that there are some delays in client conversations because of this conflict in West Asia. But it's also adding that the actual geographical exposure of these companies to West Asia is fairly low. So it doesn't see it as a very disruptive event. And CLSA feels that sector valuations are very attractive at a 10-year average level. So we have both Gaurang as well as this brokerage saying that it's positive on IT services. Jatin, I want to come to you now. You tell us in yesterday's recovery, and it was very broad-based recovery, right? A couple of financial stocks also moved higher. Generally speaking, in the large cap space, where or which are the stocks, 2 or 3 stocks if you could call out, where you think that the recovery is actually looking durable, where stocks meaningfully came back from certain broken down levels or managed to take out some important resistances in the large cap universe?
So broadly speaking, the recovery in the last couple of trading sessions was led by the private sector banks and the Nifty auto stocks. So I believe that Nifty auto Mahindra and Mahindra is looking positive from a short-term perspective. I believe that that is one stock that traders should look to trade in, because we have a bullish pattern that has formed at the lower levels, and yesterday we did see some follow through buying interest on the upside. So among the Nifty auto, we believe that Mahindra and Mahindra is a good buy. Apart from that, the capital market space is looking quite positive. So BSE is another stock that we like. It has broken out from a bullish flag pattern, and it is showing strength at higher levels. So I think the financials, the auto have led the pullback, and I believe that Mahindra and BSE are a couple of stocks which I believe are likely to continue its up move.
Okay. So those are some ideas from Jatin. But I want to call out 2 specific brokerage views from Goldman Sachs. on L&T and BEL. And we know both of these stocks have also suffered in the overall market fall, especially L&T. Now, Goldman is still keeping its buy call on Larsen & Toubro. Its target price is about 4,420. Now, Goldman is acknowledging that, yes, this West Asia issue is going to impact earnings. It will impact the near-term order book and order inflows as well. It's saying that Q4 revenue to fall on slower March execution. It expects, or it sees the possibility that the weakness in the business could extend into the first quarter of FY27, the new fiscal as well. In fact, they've cut down their order growth expectations for the next financial year from L&T from 7.7% to just about 1.1%, because they do expect a weakness in order flows from West Asia. But despite that, they've kept their buy rating. And on BEL, it's a buy call again, and target price is 470. They're citing a lot of the order wins, recent order wins, and a large order inflow of about 21,620. That's how much, that's the kind of order intake that BEL has reported in FY26. What a large number, 21,600 crores of orders won by BEL in the year that is just about wrapping up. Quickly, Jatin, on these two stocks, technical check, L&T. A lot of people I know have been sort of saying that they've been buying L&T through the fall, but they also get very nervous because the stock has been bruised so badly. Is L&T, okay, let's talk about both the traders, the trade on L&T now, near term, short term, and L&T from a portfolio perspective. What would you advise both types of people, the traders and the investors on L&T?
Yeah, see, for traders, I think a pullback towards 3,620, 3,650 would be a selling opportunity, because the overall trend is still negative in case of L&T. So counter trend rally should be considered as a selling opportunity. However, from a longer term perspective, the 200-day moving average is currently placed around the 3,300 mark. So even from a long term perspective, I would still wait for the stock to move towards the long term support, and thereafter consider a buy. So from a short term perspective, sell on rise, and from a investor perspective, I would wait for a move towards the long term average to buy.
Okay. All right. Got that. By the way, the pre-open session has kicked off. Let's take a look at what's happening with the market in pre-open. Very quiet. About 30 odd points up on the Nifty. At least that's what we're getting right now. It's only 1 or 2 minutes into pre-open, so let's just give it some time. But for what it's worth, the Nifty is suggesting that it will continue its recovery, and that's what Jatin has been telling us as well, that there is a good case that the market has another maybe 100, 200 points on the way up before it meets real resistance around 23,800. Okay, pre-open rates, BEL, Eicher Motor, Wipro, Shriram Finance, these are your gainers. Infosys, L&T, TCS, a couple of IT stocks are also holding out positive. Let's get the rates up. Look at the pre-open prices now. Nifty is up about 55 to 60 points at this juncture, and a large part of the screen is actually positive. Yeah. Do we have the rates on pre-open? Can we get the rates up? Okay. Yeah, there we go. So that's the picture now. 60 points higher on the Nifty. You're seeing, a lot of the financial names also, at least for the time being in pre-open, largely flash positive. Kotak Mahindra Bank, Bajaj Finserv, Jio Financial, a lot of these names on the upside. There is Shriram Finance as well, which is up about 1.7% as we see it. So not much of a worry, at least as of now. Reliance is the one stock which is down 1% in pre-open. But let's see if it plays out that way. Maybe it does its own thing. Bajaj Finance and Reliance, two stocks which are on the way down. Otherwise, it's largely positive. And from our stocks in news list or stocks on the radar list, watch out for Sigal. Sigal announced an order win, 2% up, about 3% up on that stock actually. Hexaware will be in focus as well. Hexaware has been announcing a lot of tie-ups with various companies, and it said that it's launched an AI enterprise agent platform with more than 600 ready to deploy these AI agents. Market loves everything AI. In the pre-open, Hexaware is pretty excited. We'll see how the stock actually fares in the actual market opening. An urban company where SBI Mutual Fund bought 4% equity yesterday, that is still quite active. In the pre-open, urban company is up about 3-4% once again. Okay, on that note, let's get back to our experts. Gaurang, so I'm going to take up our viewer's question. Viewer who was saying, give me stock ideas for the next 5 years. That's good, solid long-term investment, right? The viewer was talking specifically about two names. He was saying, is Apollo Hospitals better, or say a Craftsman Auto from the auto component space, if that's a better play. So tell us what you think about these two, and even anything else. Lots of viewers want long-term portfolio compounding ideas right now. So give us a few.
There are plethora of them. There are a whole universe, Surabhi, is there. It's for you to take it. And I'm glad, people are asking long-term questions in this kind of a market. I think this shows the maturity, Surabhi. And honestly, Surabhi, retail investors' maturity has gone to the next level over the last couple of years that I've been interacting with a lot of retailers, pan-India on my travel basis. So answer your question, Craftsman's Automation, well, we don't have coverage, so I won't go into specific, but Apollo Hospital has been on our radar for many, many years. It continues to be on the positive side as far as our fundamental team is concerned. I think one of the sectors which are relatively less affected by this rising crude oil prices is also healthcare, hospitals. So we have three investment ideas in this healthcare: Apollo Hospital, Fortis Healthcare, and Max Healthcare. Other investment ideas, if I have to pick 5, and as I call them, the Panch Pandavas, Surabhi, from different sectors. So you have banking. Either you pick a private sector bank called Axis Bank or a public sector bank called SBI. The first one is banking. Second one is auto name, Mahindra and Mahindra. Third one is from the diversified play, the stock that you were just discussing a while back, L&T. I think it's a screaming buy according to me. And remember one thing, Surabhi, people are only looking at one side. That destruction has led to order book slowdown, and 35% order book of L&T is in Middle East. Yes, it is. But remember one thing, when things go silent, when there is peace, and when there is business as usual, all these things which are destroyed or the destruction that has taken place, Surabhi, will need to be rebuilt, and possibly rebuilt with a little bit of more reinforcement. And all that thing L&T will be doing, right? So we are extremely positive on L&T. So that's the third recommendation idea. Fourth one, if I have to pick one from the pharma pack, then it would be, again, two names. Either you could choose Cipla or Sun Pharma. And the fifth sector that I am extremely, extremely positive is defense. So here there are two names again. Either you can pick a name called MTAR Technologies, or again the stock that you were discussing a while back, BEL, Bharat Electronics Limited. So these are the 5 thematic based names which have proven track record as far as history is concerned.
Okay, I like that. The Pandava sectors of the market, and you've picked out stocks in most of them. Interesting, Gaurang. Thank you very much for that.
Thank you.
We are at about 9:07. So before I let you gentlemen go, Jatin, okay, let's get your overall synopsis on the market. Do revisit the levels, because you said that you do expect a little more upside on the Nifty, and it's still, I think there's still some room for long trade. So right now the pre-open suggests the opening is going to be around 23,600. What's the trade on the index? We haven't spoken about banks actually, Jatin. So just a word on banks and any other top trades for today.
Yeah, see, first of all, the levels for the Nifty, I believe that 23,770 on the upside is the near-term target that I'm looking out for, and the crucial support is placed at 23,550. So, intraday dips should be bought into, and overall 23,770. See, in the case of Nifty Bank, I believe that even Nifty Bank has a upside potential towards 55,700 to 55,800, where we have a short-term moving average in place. So I believe that this pullback is likely to continue in the case of Bank Nifty as well. So 55,800 on the upside, and the support is placed at 54,300. So that is again the levels on the case of Bank Nifty. Now, the top trades for today would be a buy recommendation in Bombay Stock Exchange, that is BSE. We are expecting levels of 3,070 to 3,100 from a short-term perspective, and the support is placed at 29.20. So that is a long idea from our end.
Okay, all right. Thank you, Jatin, very much for that. And thank you, Gaurang, as well, for giving us all the ideas, both on trade and for investment. Both of you gentlemen have a great day, and we look forward to connecting again soon. Thank you.
Thank you.
All right. So where are we with the pre-open session? We're 50 points up. The mid-cap index is also pointing towards a positive start, and it seems the market will want to build on the gains it has seen so far this week. Let's do one thing. Our next conversation, by the way, is going to be on IT, full throttle IT. What should you be doing with IT stocks in this confusing market? Well, before we start that conversation, check out some of the key brokerage views today, along with the stocks and news. All right, welcome back. So as promised, let's get to that conversation on IT. Manav Medewala, fundamental research analyst at Mirae Asset Share Khan, is with us on the show today. Manav, thanks so much for joining in. Good to have you on Moneycontrol. First time we're talking. I do understand that you track a lot of the IT companies, the listed IT universe, very, very carefully. Now, what have you made of this whole talk about the AI disruption and the transition and the pivot that many of these companies are trying to make? What is in the price right now, considering that most of these stocks are down 15 to 20% over the last couple of months?
Hi everyone. So on a major announcement, if you have followed yesterday, a lot of IT companies have collaborated and announced their collaboration. Let's say Wipro announced their collaboration with Harness, Fractal launched its LLM Studio, TCS launched outcome AI platform powered by NVIDIA. Then again, Persistent collaborated with NVIDIA, and Accenture and Databricks announced their collaboration. So if you look at these deals clearly show that major IT companies are rapidly evolving from traditional headcount-based and managed services model by partnering deeply with hyperscalers, LLMs, and launching proprietary AI platforms, agentic systems. They are creating fresh recurring revenue streams while neutralizing the threat of AI inflation. So that's a good set of deals that are flowing in for the IT companies, and it should be seen as a positive trigger.
So, Manav, do you have some buys in that universe? And if yes, is it more large cap companies or mid caps? Generally speaking, what are you more positive on now?
Given the valuation comfort, so there is a valuation comfort in both large caps and mid caps. If one has to go for a buy, I would say accumulate over the period of time. You can have a mix of both large caps and mid caps, but deploy your capital slowly and gradually, because the recovery is going to take time. If you see the last 6 major crises that have happened from, let's say, 2003 to 2025, the on and on average, the break even takes 12 to 15 months. So it's going to be a long recovery for the IT companies, if at all they recover. And it's going to be dependent on a lot of events, starting from Accenture results that's going to happen on this Thursday, and followed by Q4 results from the IT companies. So eventually start deploying it slowly
Okay.
and gradually. Don't.
Okay, Manav, just give me a second. The market has opened and it's opened up very, very well. We'll just come back to that IT conversation. 70 to 80 points up on the Nifty. So the bulls really are having their way. 23,650 is here on the screen. The recovery continues. And it's pretty much across the board right now. The Bank Nifty, though, of course, is not up, galloping as high as much as the Nifty. But there's about a 100-point gain for what it's worth on the Nifty Bank as well. Let's see what's moving up in the market. Bajaj Finance, Eicher Motors, Wipro, TCS. I can see M&M and Maruti. So there's some auto, which is right up there on the Nifty tally. And a couple of these IT stocks, what we were just discussing with Manav, IT stocks are seeing a bit of a pullback as well, between 1% to about 1.5%, 2%, depending on which stock you're picking up. TCS is leading the pack with a gain of almost 2% right now, followed by Wipro, 1.6% higher over there. Interglobe Aviation is up about 1.5%. Tata Motors, PV, managing 1%. So auto, like I said, is largely seeing some traction. Mahindra and Mahindra is up about 1% as well. Beyond IT and auto, Eternal is still continuing its run from yesterday. Again, 1% after a 6% rally. So quite a few Eternal bulls resurfacing in the market. So it seems there's Trent from the consumer space that's seeing some buying, 0.7% on Trent. Reliance has opened positive, unlike what the pre-open was suggesting. Reliance is up almost 1% as we speak, so that's good. BEL is up 1%. We just told you about the Goldman Sachs call. Goldman Sachs is quite optimistic on BEL. Stocks holding up about 0.5% right now. Okay, on the downside of the screen, let's see what's not working. Metal stocks are seeing some profit taking, both ferrous and non-ferrous. So Tata Steel and Hindalco are down. JSW Steel is down about 0.5% as well. So no major cuts, but about 0.5% to 1%. Coal India, you can see on your screen. Coal India is actually the weakest stock on the Nifty right now, down just over 1%. So that's the large cap screen. The Nifty is very comfortably cruising with a gain of 120 points right now. That's a 0.5% jump. The mid cap index is doing even better. The gain on the mid cap index is 0.6%. So let's see what's working here. I'm starting with our stocks and news list. Urban Company, look at Urban Company. SBI Mutual Fund coming in and taking 4% equity. That's really fired up the imagination of the bulls. And Urban Company is soaring right now, 6% higher on Urban Company. Hexaware, which announced all these AI agents, some 600 plus AI agents they are deploying. That's gotten the market quite excited. 4% up on Hexaware. Thomas Cook is going to be looking at a business restructuring in the coming days. That's a stock in focus, a stock in news. So those are some names which are on the upside on the back of news developments. That's Hexaware. Like I said, Urban Company is the other one that's worth looking at. Let's see what else is happening. Aurobindo Pharma, not much of a negative reaction. There is that official action indicated by the US FDA on one of their plants. But the market is taking it in its stride right now, 0.5% lower on Aurobindo Pharma. That's Urban Company. It's really the stock of the morning, up 7.5% at this juncture. So that's what's happening. Now let's look at some other mid-cap gainers. These are the stocks in news. The mid-cap market is really roaring, almost 1% up on the mid-cap index. So let's see what else is moving. I've named a couple, the ones on your screen. Aether Energy is another stock that's doing pretty well. There's EPL, there's Jupiter Wagons, Axis Cades. Root Mobile is up in about 5%. You're seeing some IT names there as well. Tata Elxsi is doing well. IDBI Bank, which has been bruised so badly in the last couple of days, thanks to the fact that the divestment process, there's no clarity on it. And it seems to be stalling. That stock got bruised very badly. It's up this morning. And IT is doing really well. Look at that. Memphis, Oracle, Coforge. Most of those stocks are seeing steady traction today. So that's the market. We've had a solid opening. Quite a few PSU names also up and about. RVNL, IDBI Bank, like I mentioned, Aircon, These are names on the upside. And financials, tier 2 financials, Manappuram Finance, I noticed Federal Bank as well, also seeing gains. So solid opening, almost 150 points in the Nifty, and the mid-cap index is now flying away 1% higher. So the bulls absolutely prevailing and making a comeback. Okay, Manav, so, just coming back to your thoughts, and we were discussing what to buy. I don't know if you can call out individual stocks. If not, at least give us some cues in terms of, there's valuation comfort, like you said, almost everywhere across the sector. But which are the sort of companies that investors should look at gradually getting back into? Earlier, before we got into this AI disruption, it was a couple of mid-cap companies like Persistent and Coforge. They were consistently beating on the growth front, whereas large-cap IT was struggling. Now in this new AI era, which are the kind of IT companies that could, come out on top? What should we look for as investors?
Given the recent fall in terms of mid-cap, I would prefer Coforge because if you do a reverse DCF, the terminal growth rate comes out to be flat, 0%, right? So that gives quite of a comfort in terms of buying Coforge. Although it's a very high volatile stock given the recent few days and few weeks. So in terms of mid-cap, I would prefer Coforge. And in terms of large cap, I would prefer TCS and Infosys because given there is a lot of stability in terms of valuation, there's not going to be much of a volatile movement in that stock.
Okay. And any final thoughts that you'd like to, leave our viewers with in terms of growth rate? So you've called out obviously some of the names, and that's very helpful. Purely in terms of growth, are you writing off FY27? Will it continue to be like a 1 to 2% kind of growth here for large cap IT? And what about some of the mid cap names like Coforge that you called out? What should we watch out for? Top line in FY27?
So in terms of top line, borderline for FY27, not much of a EPS cut would be seen. Majority the street would be focusing on what FY28 and beyond that brings in to consideration. So everyone's going to be focusing on AI commentary, whether or not there is renegotiation commentary, brought up by Accenture and the TCS and other guys, or whether managed services pricing pressure is acknowledged, and if there is a higher TCV or a guidance is closer to what the street is anticipating or higher than that, could be a re-rating trigger.
Okay. All right, Manav, good conversation. Thank you very much. I think it'll give our viewers plenty of food for thought, and we hope to see more of you on Money Control in the weeks ahead. Thanks very much for joining in. Have a good day. Okay. Well, let's move on now. It's turned out to be a solid morning in terms of a comeback that the bulls are making. The index is managing a gain of 0.5%. Mid-caps are doing even better, and investors would be heaving a sigh of relief. Well, our next guest would definitely know a thing or two about investor sentiment and just how mutual funds can perhaps be the best vehicles to navigate such confusing markets. Let me welcome in Avinash Satalekar of Franklin Templeton, India, joining in. He's president of Franklin Templeton, India. Avinash, good morning. Thanks so much for being with us. I'm so glad that you could make time and be with us on Money Control. I hope this is the first of many.
Good morning, Survi. Thank you very much for having me, and absolutely look forward to making this a regular feature with you.
Lovely, Avinash. So let me start right there. This has been a difficult now almost nearly 1.5, 2 years, at least for equity investors. They've been patient, but they've been watching very confusing markets. They've been watching equity underperform, other asset classes zoom ahead. And now we're in the midst of this full-blown war. How do you sum up just investor behavior that you've seen over the past couple of months and the kind of queries that you see around and what you've seen, say, in the last couple of days in this war? Because when I was speaking to the CEO of another AMC, that gentleman was telling me that actually there's a lot of lump sum inflow that's been coming in even as those missiles were flying.
So let's take a look at the markets itself, right? I mean, if you're looking at what's happening with oil, that is a real important cue to tell you where traders are expecting the economy to go. Now, if we assume, our working assumption is you're looking at a $90 oil on average, that's 30% above pre-war level. So if you're looking at the last few days, the excitement around oil should be an indication of where we think the economy is going to be going at a global level. Your question about investor behavior is actually really pertinent, and it's something that we track a lot at Franklin Templeton. In fact, in the last earlier this year in January, I did an investor awareness drive through the country. I drove from Kanyakumari to Kashmir, so it's about 4,100 kilometers in 30 days. And the idea was to try and understand what investors are thinking and to build awareness for women in Bharat, right? And I'll tell you that sentiment, what you're talking about, is very similar across the board, right? I mean, there is a little bit of concern around it if there's awareness around mutual funds. But the idea of what an investor should be doing is very simple, right? You need to stay calm in an environment that's extremely volatile, right? That's the first and foremost thing, because emotions play havoc. Second thing is to focus on your long-term goals. Those are what's going to help you build wealth. And that's different from being rich. And lastly, you've got to be non-stop with SIPs. And the reason for that is SIPs were structured precisely for these kind of volatile markets. Right? So if you've got, it's really good to see a green day. I mean, you mentioned that earlier. But that doesn't mean you're going to have green days all the time, right? You're going to have some volatile, because we are in the midst of a war, as you mentioned. So there is going to be volatility. It's a function of how we deal with it as investors that's critical. Right? So in our mind, there's a lot of different opportunities that volatility can bring to you. That's what you have to be ready to take advantage of. So if you're talking about lump sums increasing, I would be more in favor of an STP, even if you're doing lump sums. And the best is obviously an SIP.
Okay, so batting for SIPs in a market like this, I completely take your point. It is an instrument designed to make the most of a falling market as well and bring in the power of compounding. But Avinash, let me ask you, actually maybe this is more a question for your fund managers or maybe for Janki Raman. But in general, as a fund house, when you see a big geopolitical situation like this play out, which in this case has a very direct bearing on India, as a house, are you thinking of, maybe taking certain major calls in terms of just exposures, lowering down on risk, or is this a time where perhaps it's the time to go all in because finally you're getting stocks at better valuations? So I'm just trying to understand from a house view perspective, how do you look at this situation since the war right now is 3 weeks old, or maybe it ends by next week, hopefully, but we don't know. We never know. It's in an entire region-wide conflict.
Yeah, so I don't think you know when the war is going to end, right? Obviously, none of us knows that. So the idea, the way we've looked at it is kind of the same thing that we talk about for our investors. You've got to be ready to take advantage of the volatility. So have we been peeling into certain things? Have we been slowly and gradually increasing positions in names that we like? Absolutely, right? So if you look at valuations, and you mentioned that, across the board, valuations have come off a little bit, right? So if I look at large cap valuations, they are now at about the long-term average, around 18 times. Mid caps and small caps are still above their averages, right? But having said that, you have to go where there's going to be growth. So is it completely unjustifiable for valuations to be high? No, provided there is growth. So that's the key factor for us. And I think what we're seeing now exactly is what you pointed out, right? There are certain sectors where we are going to see certain advantages, and that's where we're focused on. So sectors like that are domestically focused, that can be a little more of a buffer when you are dealing with a global crisis. Something like a healthcare sector, or if you're looking at CapEx, where infrastructure spend continues to be a domestically driven initiative. Those are areas that will be slightly buffered from a global kind of meltdown that we're seeing across the board. Now, there are obviously going to be sectors that do get impacted by this, and whether that is airlines or tourism sectors, that's where you want to be a little more cautious as you're going forward. But we are definitely taking advantage of this volatility to expand positions where we have conviction. And that's exactly what I think most investors should be doing, even in their mutual fund allocations.
Okay, take your point. Financials were getting a huge drubbing, Avinash, while this war was on. And there was almost, a day, and sometimes it would defy logic. You'd wonder why, because maybe people were jumping to second and third and fourth order impact of this war. And I think in a lot of your folios and in a lot of your funds, financials still have a sizable presence, a significant presence. So, is that still intact, or is there any reason to worry? Because that's seen as one of the key pillars of this market across funds, across the industry, maybe, if I can say.
Yeah, so it's funny you mentioned financials, because we've been taking a look at that and seeing how that sector in particular has been, I'd say, disproportionately getting impacted. We are long-term investors, right? We've always been long-term investors, and at the core of any economy, right, you need a strong financial system, and our financial system is actually very strong. So the question is, are we believers in the longer-term growth of the Indian economy? And if that is the case, we are going to have a very upward lift to the financial services sector, right? Especially the banks. So I don't think anything has changed in terms of our assessment of what that long-term growth looks like for India. Now, yes, you could have a little bit of a shift. You will definitely have some impact on inflation. You'll have some impact on, maybe instead of getting 7+% growth, it might shave off a few basis points here and there. But the longer-term growth trajectory for India's economy is not necessarily going to get derailed by this. Now, our working assumption obviously is that this is not going to be a long drawn-out war, and it is going to, as you rightly predicted, it is going to end next week, right? So I think if that's the working assumption, then we want to take advantage of what we think are going to be longer term. And so I think the banking sector in general is one of those long-term beneficiaries for an economic growth that we still believe is going to be in this 7% range.
Okay, all right. So keeping faith on financials, not expecting this to really play out. But Avinash, as I come down to final thoughts, the issue is now whether the war ends or tomorrow or it ends next week. The problem is for us and for the market, the price of oil. And I think a lot of economists that I spoke with over the last couple of weeks are saying that forget 70. Best case, 85 to 90 is probably the new normal. And you said that I think, your house call right now is that oil averages around 90, for the better part of this year. So at that level, and the way that's going to play out in terms of fixed income, the way that will play out just on commodities themselves, that, does that lead investors to look at diversification? Because anyway, I think that's what 2025 taught us. That if you have all your eggs in one basket, in the equity basket, there are years you'll be disappointed. And then people were running to gold and silver after those commodities had shot up 150%. So your last thoughts on how investors, perhaps even those who've not done it now, how can they start getting their asset allocation right, even when, say, precious metals are at elevated levels, oil is at elevated levels, and not too many investors here in India have exposure because we've just built pure equity portfolios in the last few years.
Correct. So I'll give you two things, right? One, especially since you brought up oil, right? Now, oil, you're right. The fact that I think our expectation is that it will stabilize around $90. Now, if it stabilizes around $90, that is 30% above pre-war levels. So will that have an impact on us? Of course, it's going to have an impact on us because we still import and we are still dependent on oil. But oil dependency for India has come down 27%. So if we're looking at, let's take a unit of GDP that required, let's say, 100 rupees of oil to create a unit of GDP growth, today it requires nearly 30 rupees less. So it requires only 70, right? So our oil intensity as an economy has come down. Now, on your second thing around how investors should be positioned, I completely agree that you need to have diversification. So it never makes sense to put all your eggs in one basket. You need diversification across the board, right? Even if you are equity biased, you cannot not have other asset classes, right? So I think last year was a perfect example that taught us that you do need that diversification to a great deal. So we are still of the belief that having a balanced portfolio, right? Having a hybrid portfolio is critical, right? Whether that is through a balanced advantage fund or whether that's through a multi-asset fund, those are categories that actually give you that diversification. And I still believe that debt funds provide a shock absorber for your portfolios, and that should not be ignored, right? So that's why I think multi-asset funds actually make a lot of sense, because you get a little bit of all of that. And the main thing you want to do is absorb shocks. And that's exactly what we're going through right now. And that's what a portfolio and a multi-asset or a balance or a hybrid overall will do for you. And we still believe that that is probably the best way forward, especially when we are in such a volatile period.
Okay, all right. I think that sets us up very nicely for our next conversation, which is actually going to be on the fixed income market in just a bit. We'll have Avnish Jain, CIO of Fixed Income at Canara Robeco Asset Management, join us in the next few minutes as well. But final advice, Avinash, what would you tell investors? They've tried to be patient, but now they're almost, I think, they're looking elsewhere. People want to invest in global markets as well, looking at the resilience of the US market. That market is like Teflon coated, never falls. Oil, war, AI disruption, Fed chief is getting fired, doesn't matter. It's just been such a great performer. What's the final advice you'd leave our viewers with?
I mean, like I said, diversification is important. You need geographic diversification as well. So a certain allocation to the US markets also makes sense. But I will reiterate one thing when I look at kind of final advice, is to kind of reiterate what I said earlier, which is stay calm. I think having our emotions in check is going to be the most important thing for us to deal with. Because yes, we're seeing a green market today and we're happy and we're all feeling a little better. But last week, I'm sure you were feeling the same thing, that it just red and big red moves down creates a whole lot of emotional disturbance. The idea is to stay calm. And the only way to do that is to focus on the long term. So you got to stay calm, focus on your long-term goals, and then keep investing regular. Do not change that. Make it almost mechanical, because that's what helps you longer term. Because you need to average down, because there's no crisis that we've ever had in the markets where 1 year, 3 years, 5 years out, the markets haven't been up. So you just have to look at history, and that will give you the confidence and conviction.
All right, well said and points well taken. Avinash, thank you very much for being with us today. Helps to listen to, a voice of reason and a voice with plenty of years. You've seen these markets through their ups and downs, so really helps to have that context and background. Thanks very much. Have a great day, and we look forward to hosting you again soon.
Thanks, Ruby. Take care.
All right, you too. With that, quick check back on the screen. Let's see what both the rupee and the equity markets are doing, because it is a green day, and the equity market is still managing to hold a gain of about 0.6%. Mid-cap screen is looking very good, 1.3% up on the mid-cap index. Bank Nifty is a little, relatively it's sulking a bit. It's up only 0.2%, but the IT index is really, soaring away today, leading the gains. Overall, it's a very good-looking screen. The rupee hasn't pulled back very meaningfully from the 92.50 handle. I mean, the worst point for the rupee was almost, breaching 92.50. Today, we're looking at the currency at around 92.42 thereabouts. But in the equity market, the sentiment at least is better off. FPI selling also reduced, at least yesterday it reduced. But yes, the currency markets and the bond markets are still looking at very real worries around macros. What does this war mean for India? What does oil at $100 mean for India? So let's take that discussion up with Avnish Jain, CIO Fixed Income at Canara Robeco Asset Management Company. Avnish, good morning. Thank you so much for being with us on Moneycontrol. Pleasure to host you on our shows. I'm so glad you're here.
Thank you very much. Happy to be here.
Avnish, so let's kind of start with your overarching thoughts on how you've seen the market behavior and how you size it up, given that this war started from nowhere at the beginning of March, and the rupee has had its own share of woes. We've seen yields starting to rise because of inflation concerns. So where are we 3 weeks into the war?
Good morning. So I think when we look at the situation on the fixed income markets, Fortunately, March month, the auction from central government is not there. So there's less pressure on supply, though there is more supply on state government side. So that's a bit of a worry. But due to good demand from long-term investors like Provident Fund, pension funds, and insurance companies, the auctions have been sailing through at good levels. So currently, the situation is not so bad. We have seen 10-year government bond between 665 to 675 range. RBI has also stepped in large, both on primary OMO purchases as well as on the secondary market. They have, I think, bought around 60,000 crores. So they have been kind of supporting the markets so it doesn't really spike up too much, especially after the war started end of February. After that, I think markets have found a level and they're continuing to be in a range-bound manner. However, after having said that, I think earlier the expectation was the war will be over in 2-3 weeks. We are already in the third week. Of course, when war ends, nobody knows. Hopefully, it does end faster. But if the situation continues for long and oil, say, is $100, and even after the war, there's a ceasefire or something, getting the production lines back on track would be quite difficult. It will not be immediate. So there will be lingering impact of on oil prices into the next 2-3 months. Probably oil will settle around $85-90. So that is still, from a fixed income side, it's still bad. And rupee, obviously, we have seen some pressure from last year. And again, it has again come back this month.
But, Avnish, the question I think that we need to understand is that are we past the worst? And if I look at the market screen, if I look at the way oil prices are behaving, let's pull up crude oil prices as well. That's the dollar rupee, looking much better now, 92.37. Whether I look at the dollar rupee, whether I look at the dollar index, whether I look at crude oil prices, whether I look at the equity screen, all market screens seem to be indicating that we are done with the worst. Would you agree? Is that how you would read it?
I think market believes that President Trump is going to back out soon. So I think that could be one of the factors. The last few days, he has given mixed messages. And I think yesterday also he said the war will be over soon. So I think market is jumping from greed to fear very fast. From a slightly medium-term perspective, oil prices for India are not good. And higher oil prices mean RBI will be more alert to any pass-throughs to the core inflation. While typically central banks will look through the supply shocks, especially from energy, a longer drawn and higher energy prices will play into prices. And we could see some cautiousness from RBI. So obviously, RBI had given a very rosy picture last time. But that has changed a bit, both on inflation and growth. I think inflation will go up from here as per probably due to base effect as well. But additional pressure due to oil price will also feed into that. So we have to see how RBI maintains their calm during this trying period.
How much, Avnish, how much of an inflation and GDP impact, and I'm working with the assumption that oil remains in this band of 90 to 100. I saw some estimates, and I think estimates are largely indicating that maybe 20 bips impact on GDP growth, 25-30 bips impact on inflation. Would you say that that's the range? Because with markets, it's all about pricing in the risk. Once it's priced in, markets stop, being very violent or very volatile. So what do you think is being priced in now at these levels?
Absolutely. I think if we look at more at the OIS curve, which has jumped to around 650 levels from about 620. So market is pricing in some tightness in the near term and in the future. Probably they are starting pricing in some rate hikes, probably next year or end of this year. So that's the OIS or swap pricing. Curve pricing, I think, is more demand and supply dependent. I think going into April, when Supply pressure again comes from central government borrowings, which starts in April new financial year. There would be pressure on rates in the immediate first or two auctions, and then we have to wait and see if RBI steps in to try to gently nudge the rates and trying to form a floor a ceiling to the rates by doing open market operations, because liquidity also needs to be good. I think considering that we are in a situation where there is uncertainty all around, liquidity in the market is key factor to keep markets functioning properly. Last few crises which we have seen, a large part of crisis is due to liquidity absence. And then if you see COVID also, central banks reacted very fast in putting liquidity in the market so that there is no fracture of the market. So I think if RBI continues that, we would see uptick in rate definitely. I think considering that now rate cut cycle is over for India for all practical purposes. And hopefully RBI is not looking at tightening anytime sooner, considering inflation is still around 4% as per their expectations. We have to see if they increase their projections in April policy. So again, this is a very kind of event which remain in flux. So difficult to take a call till the war ends, and then we can probably take a more educated guesses on how things go forward.
Sure, no, absolutely. But you are saying that now the market is beginning to price in the possibility of a rate hike here or in the US?
So, in our country, so I think US market is, if we see at 6.5 and 5 quarter is the 5 quarter is the repo rate, and let's say 6% is 1 year OIS rates or 6 quarter. So actually, we are seeing some pricing of rate hikes probably, not immediately, of course, but later in the year or next year. Market is pricing that.
Okay. Speaking of, global yields, Avnish, what have you made of the hardening that we've seen on US yields? I mean, we almost reached a level of 4.3, right, at the peak of the conflict. We have a policy today. I think it's a near consensus that we won't see anything on rates, but do you think the Fed could at some point look at reversing policy? I mean, Mr. Trump is out for Jerome Powell's neck even before he leaves the Federal Reserve, saying cut rates. What do you think we'll expect before Powell's term ends? And of course today?
Yeah, so for today, yes, there is a 0% chance priced in for a rate cut or any action. I think 10-year US yield has been very benign, I would say, because we have seen the last year movements about 50-60 basis in few months. It is, I think since January, if we see it between 440 to 4%. So from US angle, we can consider it quite benign. I think for Chairman Powell, I don't think he is going to cut rates. In June, the new governor comes in, Kevin Walsh, and I think his mandate is to see if rates can be cut. I think, of course, then rate hikes are entirely not plausible. In the US, we are seeing growth. Obviously, pump prices are up in US as well. But like I said, typically central banks will look through those actions because of supply fractures and supply pressures, inflation through that, and look at the broader picture whether inflation expectations are going up. I think that is when they will react. So markets are more worried that whether Fed will be able to cut this year, because they were pricing in 1 or 2 rate cuts this year. Now markets are saying there is no rate cut this year. So again, how soon the war ends and if projections change again. So probably we're looking at a year where most of the central banks are in a pause mode.
So to sum it all up, Avnish, I'm going to ask my simplest question once again at the end. Are we past the worst?
I like to take.
If no, and this is not a question. By the way, Avnish, this is not a question. No, I'm saying I'm not asking you to predict in terms of the war. I mean, tomorrow, God forbid, something dramatic happens, then it's not. I'm saying if things stand as they are, some missiles and some drones here and there, and Trump is not really building on a bigger attack. If things stay as they are? From a market perspective, are we past the worst?
Yeah, I think so. So, not discounting any major flare-up going forward. I think most of the negative news has been built up. So, US and Israel have bombed Iran for so many days. Iran has also retaliated across various neighbors. They've closed the Strait of Hormuz. So after that, I think for markets, I think for India specifically, we are more, I think I'm more concerned about the LPG situation where we are already seeing some impact on various small industries. So if it is a prolongish war, then that could get worse. But apart from that, I think from a fixed income angle, I think we are not seeing the probably past the worst situation.
Okay, all right. That sounds optimistic. It sounds hopeful. And I think it's something that we will take with both hands. Avnish, thank you very much for joining in. Very nice conversation, very helpful. Gives us plenty of context as to how the fixed income markets are reading in between the lines, because with the market, it's always the obvious and what the market is reading beyond the obvious. Thank you so much for joining us today. Have a great day.
Thank you.
All right, so there you go, a view on the fixed income side and on the equity side, and whichever way you're looking at it, including the price of oil. Let's just get the price of oil back on the screen. Markets are indicating that at least the market interpretation right now is that the worst, economic or market impact seems to be over if we don't get a bigger flare up. In fact, we just were hearing Avnish talk about the fact that from a consumer perspective, from an economy perspective, we probably past the worst market impact. But from a real economy impact, we need to look at LPG availability. That is the biggest question for India. And just yesterday, we had another briefing from the Ministry of Petroleum and Natural Gas, where top officials again briefed on the latest situation, reiterating that there is sufficient gas right now and there's no need to panic. Take a look at this, and then let's come back and we look at the markets once again before we say goodbye.
क्रूड अवेलेबिलिटी सामान्य है. हमारी रिफाइनरीज उच्चतम स्तर पर काम कर रही हैं. रिटेल आउटलेट्स पर कोई शॉर्टेज नहीं है. पेट्रोल और डीजल पर्याप्त मात्रा में उपलब्ध है. मैं देशवासियों से अपील करना चाहूँगी कि अफवाहों से बचें, घबराएं नहीं, ऑनलाइन बुकिंग करें और एलपीजी सिलेंडर की डिलीवरी उनके घर पर होगी. पैनिक बुकिंग से बचें. इसके अलावा मैं ये भी कहना चाहूँगी कि जहाँ पर ऑल्टरनेट फ्यूल्स संभव हैं, चाहे पीएनजी हो, चाहे इंडक्शन या इलेक्ट्रिक कुकटॉप हो, उसका प्रयोग करें और एलपीजी को किफ़ायत से यूज़ करें. जहाँ भी संभव हो कंजर्वेशन करें. यही हमारी आपके द्वारा सभी से अपील है. थैंक यू.
Okay, all right. That is the view from the government in terms of how they're looking at tackling the LPG shortage situation. Let's quickly bring it back to the screen before we wind up for this morning. The Nifty is continuing to move higher. 23,733 is what we have. 150 points up on the index. And mid-caps are leading the way. The mid-cap index is looking solid. The gains on the mid-cap index are double the gains of what we're seeing on the large-cap screen. The Nifty mid-cap index is up about 1.3% as we see it. Now, let's take a look at the winners. Today, it's IT leading right from the front. It's IT all the way. Infosys, TCS, HCL Tech, Wipro, all of these stocks are up and about. Eternal is building on those gains. Mahindra & Mahindra is positive. Trent, L&T, Interglobe Aviation. It's just a big green screen as we can see today. There's Bajaj Auto, there's Power Grid, there's Tata Motors, PV, lots and lots of stocks cutting across the lines. Relatively speaking, banks are still sulking. The bank index, the Nifty Bank, is barely up, 0.1, 0.2% higher. So banks are not quite joining the party just yet. And you can see that on your screen. ICICI Bank, HDFC Bank. The moment these banks decide to cross over on the green side, obviously it's going to be great news for the Nifty, even better news for the Nifty. But right now, SBI is the big one that's positive. These two banks are keeping a lid on the gains. Let's quickly run through the mid-cap gainers before we sign out, because mid-caps are really where the action is. Look at Urban Company. I really want to flag off this stock. I mean, Urban Company is soaring 14% up because the market is so excited with SBI Mutual Fund taking such significant stake in the company, 4% stake. Those are some of the other names, mid-cap IT names like Tata Tech, Coforge, looking very, very smart indeed. You have names like JBM Auto, Ather Energy, Electra, Green Tech, all of these names from the automotive space having a very good day. Serra Sanitary, Root Mobile, Raymond Realty, I could go on and on. It's a phenomenal morning for mid-caps. It's a big, big green wave that we're in the midst of. Well, on that positive note, we wind up today's edition of Opening Bell. Many thanks for watching, but more news and updates coming up as we go forward. We leave you with some more insights. Thank you so much for joining us on Money Control this morning.
We are allies with America, but we don't really understand their moves recently. Like I said, also we haven't been consulted and we don't really understand what are the objectives of this war. So I think this is the underlying feeling. At the same time, I mean, we are willing to also invest in our relationship, in the transatlantic partnership that has been under heavy strain. But, you know, it takes two to tango. Every relationship has two sides. So let's look at things that we can do together. And, you know, if our participation is needed here and there, also we expect that we are consulted.
Well, we don't need too much help, and we don't need any help, actually. In fact, we just put out a notice. I was watching over the last couple of weeks, and all of our NATO allies were very much in favor of what we did. They thought it was very important. We were just discussing it, actually. Very important that we take out the nuclear threat from Iran, and we've done that very strongly, very powerfully. We've wiped out their navy, wiped out their military in every aspect. But I was surprised to see that NATO, while they agreed that it was a very important thing to do, they agree fully. Nobody said, oh, you shouldn't do it. They would have had a nuclear weapon within 1 month of when we had the B-2 bombers bomb the nuclear potential. I call it the nuclear dust. So I think NATO's making a very foolish mistake. And I've long said that, you know, I wonder whether or not NATO would ever be there for us. So this was a great test, because we don't need them, but they should have been there.